Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar now pull back just about the time when it looks like it's about ready to break out. And we had even scaled this 97.45. It was like an interim little minor top, or not minor top, but top we'd seen. But looked like we were going to go and make it for this 97.66. And we just started going edge back. And, on a short-term basis, I mean, you can see the momentum has shifted here. You can see a crossover to the EMAs on the 2-hour. Generally, we'll use the EMAs on the 30-minute. I'm not seeing any. There isn't. I'm still questioning on this move. Let's say if we get a good non-farm payroll, we may see one more big jump in the dollar before, let's say, it eases back, because I kind of want to associate that with maybe, let's say, not necessarily an event. But maybe a key economic report, and we just seem to just slide. The only thing is with the euro is that as it dipped a little bit lower, we didn't take out any further lows, and we have pushed back. We have gone and pushed back here, not a whole lot, but we're certainly moving higher. And then risk on is definitely just that, risk on. Boy, look at these S&Ps have just moved to new highs. We'll jump into that quickly. Boy, look at this move here. Oh, and by the way, look at the bunds. Look how much the bunds have come off. Wow, that's come off quite a bit. But unbelievable here. Obviously, there's reports that China and the U.S. are close. And boy, they are just making the most of that. Look at that, pushing here to these highs. And boy, what a rip. Let's take a look at something quickly. They come into this key area, 28.96 might be. They're just making the most of this. And look at the DAX here. $11,952. It makes me think, other than the thought that like China's coming out of its own woes, possibly. Honestly, I don't get it where all these other indices are jumping up and down. Things are woeful in Europe. I don't know what the heck they'd be jumping up and down for. That's what I'm thinking is maybe it's just a move here. Certainly we're not moving to new highs. We're just returning back up here, and this should be a key area right in here, 11,940. But interesting. Let's go on and move back into the main page. But as we said, we're seeing the euro pop up. Look at what he already made it up to the 1241. And look at the cable. Nice move here in the cable also. Saw some good activity in Asia last night. I was talking to Norman and a few of the other guys here. Saw some good activity in the sterling versus the odd. But look, we're still making a move here, and I guess right now we're coming up here closer to this 32.27. Nice rebound, just about the time. The same thing with the cable. Looks like it was starting to go down. I know Teresa may have reached out to Jeremy Corbyn, and we'll get into all that. And also, certainly, I'm surprised that WTI hasn't even managed to further, since everybody is jumping up and down about the U.S. and China coming to a deal. Honestly, I don't get it for some of these other countries. I could see Australia But I don't get how the DAX is going to be has necessarily responding, although it's not responding as dramatically. But look, this crude continues to still move higher, which is having its own weight here on the dollar CAD. It's made a run. I'm wondering where they're going to go in and try and flush these people out. But let's go and move into the news. And dollar yen, boy, did that go and pop back up. I'd actually jumped out of my shorts in the U.S. session, and I was glad to go in and do it. We actually did dip in Asia, and we didn't quite make it to the 20. It looks like we made it to right at 21, right at 21 and a half. And then they quickly bounced back, and look how they added into those gains. And actually surprised that in light of all the hip and array moves that, and I know the Nikkei had also moved up, that the dollar yen didn't even respond even further. Resistance comes in the 62 is the 78%, and we could also come up here to about 71 here. Hang on 1 second. I'm just going to reach out to Stelios. But anyway, let's go and move into the news, and then we'll get on to the analysis. Glimpses a softer Brexit after May shift. After months of seeking the backing of hardcore Brexiters in her own party for a deal, Theresa May has abruptly decided to try for a cross-party compromise with Labour instead. With Labour policy, while still open to interpretation, based around the things like a custom union, single market access, and even a second referendum that opens the door to a much softer Brexit than many in May's party can tolerate. So far, there's been no resignation from her cabinet, although that might change as devastatingly critical headlines in the pro-Brexit press start to resonate in the Leave constituencies around the country. The rough top line now involves a first-time meeting between May and Labour leader Jeremy Corbyn today, and a new test of parliamentary test votes on a compromise options on Monday. In theory, setting May up to take some kind of new version of Brexit back to Brussels at an emergency summit next Wednesday. My goodness. May remains ambiguous about the extension she is seeking. The EU has already given her one up to May 22nd, after which the UK will have to take part in EU elections. The UK Premier insists she does not want to do this, but nonetheless, earlier this week, mandated her deputy David Lidington to fund contingency preparations for elections if needed. That means that a longer extension, a prerequisite for holding a second referendum or a general election, is still open. The advantage for May in the cross-party approach is that it gets Labour's hands dirty in the quest for a Brexit compromise. She can blame them for either blocking a deal or pushing her towards a soft Brexit she didn't want. Yet there's a certain appeal for Corbyn in all this too. He gets to drag May towards a softer Brexit, knowing that this is the very thing that could rip her party apart. But she may also be tempted to block any compromise in hopes that it triggers a general election. Neither May nor Corbyn are known for their powers of empathy or readiness to compromise. If anyone's guessed now what emerges to what may happen in the encounter. Without a great deal to go on, world stock markets have broken decisively higher to 6-month highs. Eyes are on a steroid-driven healing of China's economy, a resumption of U.S. trade talks in Washington this week as Chinese delegations lands there later on Wednesday, and UKPMA's latest maneuver is seen as a move toward a softer Brexit. Even though Wall Street's main equity indexes stalled late Tuesday, the MSCI All-Country Index World Stocks is at its highest level since October last year overnight. Adding to the first quarter rally, it's now up to 5 days in a row and 13% of the year to date. The upbeat move was also on data of a service sector business surveys from around the world, a bright spot in the global economy this year compared with dour readings from manufacturers. Already out, China's services index hit a 14-month high in March, a further sign that the government's stimulus policies are gradually kicking in as trade talks with Washington progress. The two sides expect to make more headway this week. White House advisor Kudlow said late Tuesday Shanghai stocks rose more than 1% with Hong Kong, Seoul, and Tokyo benchmarks up about 1%. Wall Street struggled on Tuesday, not least because of underwhelming economic readings from retail and durable goods orders. 10-year Treasury yields pushed higher 2.52 basis, and the yield curve between 3-month and 10-year yields held positive to the tune of 8 basis points. U.S. private sector jobs from ADP are out later ahead of Friday's March employment report. All eyes are on sterling as it extended Tuesday's rally following May's decision to seek another delay in Brexit beyond April the 12th. Okay, let's go and move on to Forex. And then that wraps up our news. As I said, we're just going to do 2 stories each day. That's it, unless something unusual calls for something that's pressing. But other than that, that's it. Okay, talk trade optimism fuels gains in Aussie and the Won. Australian dollar and the Chinese yuan gained on Wednesday on hopes for an agreement between Beijing and Washington to end their trade conflict. Reports of progress in trade talks between the U.S. and China, as well as reassuring factory activity data from both countries. The Aussie rose 0.6, recovering from most of its losses suffered on Tuesday after a central bank meeting. The Won rose 0.2. Sterling added to its overnight gains after PM May announced talks with opposition Labour Party to break the Brexit deadlock. The euro rose as the dollar pulled back from its recent highs, touching 12.19. Right now, we've already seen 12.41. The greenback dropped against the Won. The rebound in Treasury yields ran out of steam, however, slowing the dollar's advance and turned against the yen. The dollar rose 0.2 as the rally in risk assets across markets undermined demand for a currency that investors typically buy when they want safety. Japanese currency dropped to 11.53 yen per dollar. Major central banks are embracing the dovish rhetoric, which supports the risk-on markets. The yen stands to remain on the defensive under such conditions, says Masafumi Yamamoto. And with that, let's move into our analysis. The euro is still trying to push up a little bit higher here. Let's take a little bit closer look here on the euro. Well, we still have our resistance here, 1247. We had our support at 1196. Now, to me, it looked like that we just might slide here. So we still had our overall target of 1149, and we'll see how that all plays out. You know, what's happening right now is we're just in the midst of cross currents because we see the European economy, and really I'm not interested in what these PMIs do. To be quite honest with you, at this point, let me just go here because really the news, as I say, has been dour. Look, anything that comes out of the European EU right now really is doesn't mean that much to me, to be quite honest with you, because the news has been one bit of news is not going to change the ship. You don't turn around, a speedboat's one thing, you don't turn around an ocean liner. And we know that this ocean liner has been going down like a submarine with the European economic activity, with Germany being the driver, the engine of the Eurozone, just being one disappointment after another disappointment. So I'm not interested in any type of economic news that may have supposedly changed things around. Really, it's just the risk on that's going with the news with the U.S. and China, and also the Chinese news, as we saw here, that's really driving these markets, really nothing else. Now, it looked like we could go in and push lower, and we may still go and do just that. Yes, we're starting to go in and turn things around here as far as the euro right here, and we didn't see very much follow-through in here, which I thought we could maybe have even dropped even lower here with the euro, and that was my concern, that we might just hit some stops so we could continue to push even lower. What could happen is, and maybe we start to see the dollar kind of edge back a bit. Just right, it was on the edge of hitting the 67 and maybe even up to 97.90. Is going to be this NFP that we see. Now, that's an event that we can see a real change, but we have these cross currents, as I said. You get the news out of China, and the market has just been hanging on for that, and maybe we are going to get that. We're just going to have to see how that plays out here. And obviously with the concerns, I mean, the dollar being the least dirty shirt in the hamper. Well, if risk on is going to come off, then the dollar can ease back a bit, but it doesn't take the euro out of the doldrums yet. Now, if we get past NFP, and I'll give you an example, if we get a strong NFP, if that was the case, and we drop down to, let's say, My target has been 1149, but let's say we drop down to 1174, okay, and then we rebound. Now you got something that you can hang your hat on. At least in my thoughts, you have a market thing. Say, hey, look, we got to an event, and now the market held to a drop, and now we're starting to turn around. Then I think you can hang your hat on something like that. I sure wouldn't hang it on any type of European data, not when it's been as woeful as it's been. And Germany has been the one leading it lower. So you're not going to turn on a dime in any case whatsoever. Doesn't mean technically we can't turn a dime if we see an event like the NFP. But once again, like I said, that would be where just about the time where it looks like everything looks as dour as can be. Maybe we do now get to see the dollar try and pull back. But it's been the story for the last few months. Just about the time the dollar's going to fall apart, it comes back like a phoenix from the ashes. And about the time it's ready to move higher, we dip lower. So we'll see what happens. To me, it's all about the NFP and what the reaction will be at that point. But certainly, as I mentioned, we've got these cross currents coming out. And remember, as I talked about it over the last few days, remember, it was about 2.5 months ago, we literally were getting stimulus coming out of China. Literally every other day there was an announcement. So it looks like it may be getting some traction. We also saw addition of jobs numbers in March, for the first time in a March in over 5 years. That came as a tweet from FX Macro. And we're seeing this China data starting to turn around a little bit. Maybe they feel like there's some traction. Then when you add it on with potentially the news coming out of China and U.S. talks, it just adds just a little bit more fuel to the fire. And we're seeing that already in equities. So, I mean, if you think about this, I've probably seen a lot of clamoring going on about, things are turning around here for the euro. Well, let's put things in perspective. Look, that's when you're talking about things are really moving. Now look, well, all you've done is pick your, it reminds me of that story, I've fallen, the video, I've fallen, but I can't get up. Well, that's the euro here, and all it did was pick its head up, and so I wouldn't start hooray and hurrahing yet, but it does open the door that maybe if we get a strong NFP, the euro will try and make a stab here to hold. So dips down here on breaks of lows, we may not see a whole lot of follow through, depending on if we get this risk on, and maybe we can see the dollar ease back a bit. But we'll see how that plays out. It kind of gives us the lay of the land as we go into NFP, going into Friday. So that being said, where's the resistance? I don't see any changes at this point here. For all that yakking, it's still going to be 1147, and right now the support's going to be 1196. I don't see anything changing here. Could we dip down here? You can see some support come here at, let's say, well, you can move it up here to 1206. If it's all of a whopping, 10 pips higher, dips back down, really even here to 1212, they're probably going to try and defend this market. So at least on the short haul before the NFP, you can make the case, well, dips down to 1211, they would want to defend that. So we'll just move that just a little bit higher here. And just getting a little bit of short covering, but like I said, if you're thinking you would see a strong NFP, then really any moves up in here, the market, it's going to have people say, you know what, I'll just go and get short, and then I'll make that play that's expecting a stronger NFP, and we'll see if we get it. So 1247 is right there. I don't see any changes there. Let's go move into the cable. Well, this softer Brexit, once again, we've spun this market on its head just about the time when it looks like we're really starting about to break down. This whole turnabout by May, bringing in Jeremy Corbyn, and potential for maybe now what they're thinking could be a softer move, certainly has the market, jumping right back up. So I think the market was cued. Remember from earlier last week, the market was kind of set up for a move going lower, and going lower is what it did. And just about the time where it looked like things couldn't get any worse, now we've kind of flipped things around. So it's really a rally back here. I don't know that we'll move here beyond a whole lot beyond this 32. It kind of reminds me of the euro, where the euro's at, and probably not a bad idea a little bit higher for people to probably start to take some shorts as we go into NFP if we're expecting to get a decent NFP. But some of the U.S. economic data is coming a little bit softer. So that's what I'm thinking, is if you're pre-positioning yourself that NFP may not be as I'm thinking before. Now is before the euro was started to turn itself around a little bit. It may not be as good as everybody thinks because we've had this little bit softer data. So maybe we'll come in with a bit of surprise. I don't think it's going to be negative. I'm talking about the NFP, but maybe it does something like only add 30,000 or something like that, and then the dollar pairs back. But we shall see. So looking back here on resistance, I'm just going to go here with some volume coming in right there. You see there? So I'm going to say it's 31.98 for resistance. Actually, let's look like for the market, 95. So I'm going to go with 31.98 for resistance here. Just seeing there's some good volume there at that level. And for support, right there, 31.13. But you take out this little dip low right here, just right there, come in right there, 31.13. I think just like the same thing with the euro, if there are dips down towards that 12.11, you probably see a little bit of shorts cover if they get, pick up or get a short from in the upper 1240s or mid 1240s. I think for now they're just going to probably wait and see what happens. I think it's just a matter of people that were short having to cover here, but I think the market's still probably figuring out what it wants to do. So I like that 31.98 and 31.11 on the downside. Let's go into the Aussie dollar. Nice recovery here in Aussie. Very nice turnabout here too, here in the Aussie dollar. Let's go and move into that 2-hour chart. Well, this market certainly is be wary of being short now because these markets are really primed on this whole China and U.S. talks. And remember, this is where Blake had said, hey, we'll probably see a pop, but probably a good pop to get faded. We're moving now. We're not going total gangbusters. If we were, I think we, probably it makes me laugh. Some of these other markets are jumping up and down, and the markets that are the most are the Aussie. It could be a lot higher. Now, obviously, there's concerns with the central bank and things like that. But if a market is going to respond to good news, and Blake's right, it certainly won't. In the end, it won't be as beneficial for it. But its response is somewhat subdued. If you think about it, I think we could be pushing here towards 71.60, thinking that things will really turn around. Because don't forget, we're seeing the China data change around too. So you would think that we'd be pushing somewhat higher here. So it really is rather restrained when you factor in the Chinese data is coming in better, and then the talks, you would have thought we've been pushing much higher, maybe around towards 71.60. So resistance is going to be, at least for right now, 71.48. But I'm surprised we're not pushing up a little bit higher at this point. When they do make the announcement, and I think at the time I put on here, we'd have to have 2 consecutive daily close above 72 cents, but it certainly looks like it's, a subdued response in light of all the news. The way I see it, I thought we would have even pushed even higher on that backdrop. Support right now, we'll go on and put it right here at 70.58. Kiwi even coming back a little bit, but even less than what you'd expect here in the in comparison to the Aussie. Resistance, we're going to give this one a little bit benefit of the doubt and say right there at 68.33. 68.33 for the Kiwi. And that's where we're at, 32. Support. We're going right there, 67.52. Let's go and move into the Swissy. Well, we had a resistance at par 10, and we really just all we did was nick par. And we since have pulled back. If we do slide back, this is our support for on the short-term basis. It's going to be 99.33. So another 33 pips lower, we might see the dollar ease back a little bit further. Resistance comes in right there, 99.93, coming right across here. You can see the volume right here, 99.93. Until we get some movement below 99.50, this market is still bullish. And let's go move into the dollar CAD. We've had some good stabs into the moves higher, but we're just not, I got to give the dollar CAD its due. I really do, because we could be much lower when you think of where we are with crude oil. Now, I was looking for this dollar CAD to move lower, and I was really disappointed. I tried to pick it up at 32.93. Maybe I got just a little bit too greedy. I had the opportunity. Remember, we talked about that 33.22, that date. I said 33.22, 33.08, and 32.93. Those are the levels of engagement. I didn't pick it up at 22 because the market already was dipping back. But I had the opportunity at 8, and I tried to get greedy here to pick it up at 32.92, and I'll be doggone if the low was 32.98, and we saw a good pop back up. But with the dollar correcting, although we do have employment report for Canada, this is a tricky one. I think we could come all the way down here to this, really down to where this trend line is, and come down here to 32. Maybe, depending on how the data comes out, maybe come down here to about 32.39. Now that seems like a long way, but I tell you what, each successive rally back keeps failing. You see that? Just about the time it's like, woohoo, it's the time to get long. The dollar CAD has done real well. It keeps failing. Now, for good reason, because look where crude oil's at. That being said, I think, if you're looking for volatility, I think we can actually get it this Friday. And we're going to get some, I think we're going to get, as I mentioned, starting off the show, we got some cross currents. I think to a certain extent, Friday's going to be a microcosm of those cross currents, because I think we're going to really be going back and forth in here on Friday. And Friday really is going to be a big day. I think that potentially, and you're already seeing the euro, we talked about that. You see here, 32.33. We took that run up here to what, 32, I look at that, 12.43. Our resistance from yesterday into today is 12.47. That held, and we're starting to dip back, because some people say, you know what, I'll get short going into that NFP. I think that's a smart move, but I do think that NFP may not be as strong as people expect, but we'll see. But once again, it's not necessarily, it's about positioning yourself and what is the percentages, and that's why you're seeing this market, pare back from that area here. But anyway, moving on back onto the CAD, it's been resilient in light of this continued upside move in crude oil, but it keeps pulling back, and at some point you would think that they may flush some people out. I think if we do make that dip down there, that'll probably be a very good area here to get long, but I think we will have to rip these people out, rip them out here, and these bulls, and take them down. We'll see how the employment comes out, but we might get the opportunity to rip them down here in light of the dollar paring back, but we shall go on and see. So where do we stand right now here in the dollar CAD? Well, resistance is right there. We'll go right there. You see it coming right there? So it's going to be 33.36. Support 32.71 for right now. I think the door's open to push this a little bit lower here as the market loses momentum to challenge the upside. Every time they get the challenge, they come right back down. Look at this. Okay, smart rebound. And we drop back. Then we take one more, and then we drop back down. And now we're here at testing lows. So at some point, people say, you know what, I'm just going to go and get out. And some people might even say, ahead of the, employment report, why don't I just go and exit out? Maybe I'll get one more pop up in here towards 28, and I'll just take my chips and leave. And then we turn around, we break lower going into that. We'll see, but as long as crude oil, and don't forget with this whole China business and everything's all turned around, crude oil, despite as high as it is, still has the option to maybe move a little bit higher and squeeze some people that may be short that market. So there isn't anything to suggest, at least on the short haul, other than economic, some news or oil data, to necessarily yank crude oil down, because it has that momentum going with it on this whole China news and China-U.S. news. But anyway, let's go and move into the dollar peso. Yesterday was, we had talked about that yesterday, how this market has been stretching on both sides of the market, and certainly it did do that. And we were looking for 1911 as support. And boy, this market, look, actually we had it all the way down to 10, and the market dipped even further, going into the fives, actually sevens, before it turned around and came back with a vengeance. Okay, now we're kind of finally right here. It looked like the dollar might break a little bit higher. I scalped around, made a couple of nickels here, but look how quickly we've turned around and given back. This market is really, truly volatile, and you have to be careful. If it's been, as I mentioned, really pushing the extremes over the last week or so, to the extremes, to the upside and to the downside, and then right back up to the upside, pushing into the 26s, but and hanging around there before finally breaking lower on a weaker dollar here. So support on the short haul is going to be right here at that. We're going to go right back and test it. We're going to keep that 1910, which it almost just about got there now. And resistance, we'll play it here on the short, on a real tight level, we'll call it 1921. Well, this actually worked out pretty good. Look at that 26.3. Let's go with 1921. And now let's go into the dollar yen. You know, we said we had the basic technical analysis to start the week that I published on over the weekend, and we're seeing how the short-term complexion had changed for the dollar yen because it finished at its strongest of the week, and that opened the door for us to move higher. And we're looking at 21 as a level, which is also 61%. Really, we're saying any moves up here in the 30s was going to be a great area for that to pare back, and we didn't pare back very much. But don't forget, the spoofs continue to move higher and the risk on, and we're pushing this higher. So how far can we push stretch? Well, we're talking about the 1170s, but if on this whole, you know, risk on news, I guess we could try and challenge that 1187 potentially if they wanted to stretch it and really put the short feet to the fire on this one. You know, that's why I think that Friday is going to be so important, because I think that we do have, and I was telling you about volatility, I think we have the opportunity to really push some extremes on both sides. With the euro, I think that it may come down and may not. We'll see how this employment report comes down, but we may not make it to new lows, or if we do, I think we could turn around at that point. We shall see. But they're really pushing this a little bit higher with this risk on business, and I know the Nikkei had moved higher. If we take a look on a 2-hour chart on a very shorter term basis, this 62 now, this dollar yen could be reacting even more positively, and it's not. I mean, I thought this dollar yen would even be pushing even higher with these spoos just continuing to drive higher. Our resistance is going to be actually 1171 here, that it could push up here. Probably for today, it might not get much past the 62 because that's also a level here. Okay, you see that? Which is confluencing with the 78%, but we're going to give it a little bit more latitude here and say that they can move it up to 1172. And support for right now is this 1121. Now let's go with the cash dollar index. Well, we do have a little bit of a gravestone doji on this daily close here. I thought we might be able to make it up here to 97.66, and it looked like we might even push a little bit higher. But this China news is also, as I mentioned, you've got these cross currents just about the time that things are getting about as bad as they can get, and people pushing into the dollar. They're really, the market is shifting its momentum. What it's doing, it's the they're hanging their hat on, for lack of a better phrase, is really hanging their hat on and betting full house on this whole China-U.S. talk business. And with that, we're seeing the dollar going to ease back a bit here. And ease back, it certainly has. As far as support, let's go and move into the 2-hour chart. Excuse me. On a little bit of a stretch here, we'll go with this 96.92. Let's say the market gets a little bit pushing it for what it's worth, so hang on. And on a short-term basis, it's going to be 97.28. Short-term basis here on the rally back up. As I mentioned, I hate to, sound like a broken record, but I think with these cross currents, I think this Friday, we could really see some good volatility this Friday. I think these markets are really going to be pushing back and forth. If we get a good NFP, you see the dollar come back up, and then the market's going to be, does it stop around this 45, or do we push to 66? And if so, do we lose all the momentum? It would appear, if we get news, as we get closer to a deal between China and U.S., then rallies back up in the dollar would probably be faded with that thought that we're right there on the edge. We're just about ready to make an announcement. So I think we're going to see a lot of volatility this Friday. Let's move in here to the gold market. Probably not a whole lot of reason to be moving into gold at this point. And although we're getting a little bit of risk on, but we still have the door open to move lower here. So when we look here at the gold, we'll keep this 1277. And we're up here trying to edge up here against this 1292. We're going to go and keep that here for right now. Stay with this 1292 for now. They may try and push a little bit higher, but we'll stay with this 1292. And with that, we'll move into the crosses. I think Stelio said he was looking. I just wanted to show him here that initially I had some problems getting into the go-to meeting, but I kind of jumped around. I was able to find something, but that was a little bit disconcerting when I first logged in. I thought, uh-oh, no webinar. Anyway, let's go and move into the crosses now. So let's go with the euro pound. We're dancing around this range right there. I think we're going to be kept in check unless we get some big UK news. But I think that we've already made a stab down here, and I guess they're not fooling around. As we move lower here, they just cover a little bit. But we will look as far as what the risk is, and I think that's right here. Down here, you'd look for this market. Just a dip below that, and it'd be 84.88 on the downside if they push it. Now, see right there, it's going to be right there, 85.74. Well, we got this 25.48 confluence in here with the 25.60. And you got this level right here, 25.57. We'll go with 25.57 right there. We'll call it actually 25.58, so 20 pips higher, 25.58. You can see here that 25 right here is a good level, but I think we could push some stops, get up here to 58. 25.58 is going to be the resistance. And you can see how important 25 was. Well, now that's going to be support right here. So it's going to be straight up even, 25 even. But we can push it up to, I think, about 25.58. This one's a bit tricky right here. Support, you can see the volume comes in right there at 57.58. That's still a long ways off. Hang on a moment. Coming in right there, 57.66, which is right where they found support here. And right there, 58.06, which was support before. That is now resistance. Boy, that's a long ways away from there. It's going to come in right there. 57.77. 50. Let's see here. It's going to be right there at 57.61. 57.61. Right here with the Euro QE. So we found that support right there, 65.30. Trapped in a fairly tight range here. I think that just might be a little bit too tight right there. We'll go on and go with this level here, 6604. It's going to come in right there, 65. Well, we can still take another dip here. It's going to be 6509. Quite a wide range here. We may not see that in this session, but I think we have the opportunity to go and make that dip down here to 09. No follow through on the way up. Actually, looking at this on a very ultra short-term basis. You see how they've made it here to the 38%. So you turn around and roll over and push to the downside here, but they'd have to get beyond this 38%. And actually, we'd need a 30-minute close above 65.71 to push this higher, but we're struggling here at this 38%. Let's go into the Aussie yen. Things have changed here with risk on. You know, they'd made this run. Look how quickly they had made this run here. And that was our resistance. Remember, that was 79.40, and it quickly turned around and filled, and here we are right back at 79.40 all over again. And we came off quite a bit, came off 90 pips, only to turn around and come right back again. Resistance. It's going to be right there, 79.56. 79.56. Support comes in right there, 78.96, 78.96. We'll call it 78.95. This worked out well. Look at that, 78.55. The low was 78.50. Now, how much further can we push up here? Well, we're challenging this 61%. That's a decent little level there, too. You can see how the market just eased back just a bit here. That's a 61%. Good little level right there. We can possibly still push a little bit higher. We've already made it up here to that 61%. Right there, 47.33. If we can get this yen to weaken a little bit, let's go with 47.33. There we go. Support is going to come in right there, 46.16. I don't even see if the yen would back off that much. We'll go right there, 46.32. Resistance comes in right there at 85.37. Nice little hammer type low here, wasn't a hammer though, but they'll be trying to pick up these dips here. Risk would be 84.86 for right now. 84, let's see, right there. 84. $84.84 on a short-term basis. We'll see if that can hold. Got a little bit too overdone here. There's 84.49, 84.49. Look at that 5-minute chart. Resistance comes in right there at 95.12. Able to push a little bit higher. With support coming in right there. Oh my goodness, boy, that's a pretty good move here. $93.06. Wow, that's a big range here. Nice little gravestone doji there on this 30-minute before we paired back here. We'll keep it tighter here unless they can trip beyond that. And you can see that resistance. Resistance on the short haul right now is going to be right there, 94.37. There's a bias chart, and that completes it here, and I'll get that posted. And thanks for joining us here on the European Crossover webinar.